Sephaku Holdings. 36% interest, in other words, an associate interest investment in a new cement plant that's being built in Lichtenburg, out on the northwest province. I think it's called Aganang. It also owns a grinding and blending plant near Delmas. That's where you take the slag from the cement factory and you smash it up and mix it with fly ash from the power station. Believe it or not, that makes a product people want to use. And then they also recently acquired a ready-mix concrete and delivery business called Metier. Never heard of that before. Sephaku's market cap, you put all of that together in the holding company, is about R1 billion. It's yet to declare a full year of profits, so it doesn't really have a PE and a dividend yield. So this is quite an interesting story. And then there's also got the Nigerian involvement through Dangote,
That's
right?
Yes.
What do you think of this one?
Look, it's been interesting. It's sort of really been a high fly. I mean, it's been quite a unique sort of investment opportunity because it's a development opportunity of a new cement plant. And I think there hasn't been a lot of new capacity that's come on stream for some time.
Yeah.
I mean, as I said, they're bringing on 2 million tons per annum, which is actually quite significant. I think the total, including the 2 million, will be 14 million tons a year. So that's 1/7 of total capacity. So in the short term, I guess it could impact the supply-demand balance.
And it's right across the road, I understand, from the Lafarge plant,
right, which is the
same limestone deposit.
Yeah, exactly, close to the source of supply.
So they're betting on the market being pretty toasty and soaking up that extra supply.
I think what they're also looking at is export in terms of growth into the rest of Africa, because if the capacity is greater than the demand in South Africa, obviously they're looking to supply through the South African operations other places.
So am I correct then? These oaks own 36% of Aganang. So who owns the rest of Aganang? Is that the Dangote interest?
That's right, yeah.
And of course, Dangote is a massive player in the Nigerian market, Dangote Cement is one of the strongest parts of the Dangote group. And Aliko Dangote is, Africa's richest entrepreneur and all the rest of it. So he obviously knows what he's doing and has like a pan-African multi-year sort of vision.
That's right.
Okay, so you put it all together and what you know about it. I mean, is there a valuation play here? I mean, you're saying it's a good opportunity. At some point, we're going to see what kind of profits they can really generate.
That's right, yeah. So in the short term, actually that Metier business, that was a profitable ready-mix concrete business that they acquired from a private equity player, Metier.
Oh, really? So that's why it was called Metier.
Yeah, so strong in KwaZulu-Natal, expanding in Gauteng, and actually good results, and that came through in their results. Actually, they were out this morning where they showed a maiden profit, so they were obviously quite excited about that. So they're not incurring big losses actually in the development projects. I think they're obviously capitalizing a lot of the costs in the short term, so you don't see the operating costs come through, and then making profits from the ready mix. So it's quite hard to gauge. I think you would have to look at sort of the offtake of when they're at full capacity and obviously do a projection in terms of what that may mean from a profit perspective. I think you've seen the share price run up a lot, so it's sort of full in terms of its potential in the short term again. You've got to see those assets come on stream and produce, I think, before really get excited again. Okay, so for this one, it's again just a wait and see, not hot yet, but certainly looking interesting. Good.